With me now, Head of Commodities for Emerging and Frontier Markets at Investec Asset Management. That's Hanre Rossouw. Hanre, I look at the results and I say to myself, okay, what have we got here? We've got profit before tax, $46 million versus 158 million. So people are saying to themselves, well, we knew this was going to happen. I think the reason for the spike is probably the full year 2015 guidance and also the medium-term outlook, which wasn't bearish.
That's right. I think also the other concern has been the balance sheet. There's been a lot of discussion around potential refinancing of this business. A lot of focus at the half year, and the expectation was that they're going to burn cash, which they did. But they ended up the year with only 29 million US of debt, which is actually pretty good. If you look at the total bank facilities of close to $600 million, this business is in good shape. The question, though, is at the spot price, will this business be sustainable? And I think that's the concern for us, is that the industry is banking on higher platinum prices, which to date hasn't come through.
Out of their control, of course.
Hanre Rossouw in Johannesburg, and obviously looking at the operational comeback, I think there's some degree of credibility that's been built there. But I guess the big concern is the falling metal prices, as you've indicated. But perhaps just a sense from you whether this is a real threat going forward.
I think it is. If you look at the results, Lonmin made 5 cents CPS at a platinum price above 1,400 rand, slightly weaker, but a spot price today 12.10, and certainly at this rate, the company and half the industry is burning cash. So yes, I think one can construct a fundamental case for platinum. It's really about the timing and how long the industry can survive in the meantime. I think the other thing that was quite interesting to note from Lonmin is that they went back to actual guidance of numbers higher than previously. So we've got production of 750,000 ounces. They haven't done this since 2007. So absolutely front foot growth to cut costs, but I don't think that's going to be good for the industry to see more ounces coming onto the market.
Hanre, if the platinum price keeps falling, does Lonmin have the flexibility to actually adjust its production or its mining in order to combat that? I think they're the third biggest miner in that, but can they adjust their strategy accordingly?
I think it's not only if the price keeps falling. If the price stays at 1,200, Lonmin is burning cash. I do think, though, and they've outlined that in the presentation, Lonmin's got a good suite of old and new shafts coming on stream. So they've lined that up in their strategy to really work on the older shafts to generate cash, and then in the meantime use that cash to invest in the newer shaft. Some of these are still burning cash, but to ramp that up. And through higher overall production, they're going to reduce their fixed overhead costs. And that way they do see costs actually remaining under control. They guided to cost below the labour inflation in the near term. So a lot of work that still needs to be done, but I think a very good set of results reported to the market today.
Andre, I think if we look 5 years out, what does mining look like in terms of mechanization versus labour? Where do you see the percentages going?
Sure. No, we are certainly going to see more losses in the industry. If you look at the cost curve today, as I said, about half the industry is not making money, and the top end of that industry cost curve is all the labour-intensive miners. So we are going to see more job losses, and growth is going to come from mechanised mining.
Hanre, thanks so much for your time this evening. That's Hanre Rossouw, Head of Commodities at Investec Asset Management.